the team.
Ladies and gentlemen, welcome back. We got another chart talk coming at you. It is Monday, April 22nd. It is 1:15 here on the West Coast. That means it's 4:15 out on the East Coast by Bennett. How are we doing today?
Doing good, my friend. Doing good.
It's good to hear. All right. Big Knicks game today. Go Knicks. Without further ado, let's get into some charts, huh?
Let's do it.
So, real quick, not much different, message to hammer on than last time. We had this big market breakdown, and it changes the market for a bit. Now we go into this more volatile stage, more in and out trading. And what we want to talk about today, more so of, the reasons why we'll be less active during these times versus, sometimes where we're just trading. So real quick, go through the market. S&P was up today. We got a nice little bounce back. Q's bounced back as well. This Google, man, this Google really hasn't failed much. It's a very interesting name to me, and it's really just hugging this 21-day moving average. So that one's looking nice. I don't really have much going on. I'm still sitting in this GCT. We bought this. Where's that? So we bought this here this day. I did a little ad this day, second day, but now I'm just holding it against these lows. Looks really good. Tons of relative strength. Everything's looking good there. And then I bought the trade of the week too. This is just really nice setting up, and I feel like we're not going to have a ton of these setups coming out of very tight consolidation. So that was the reason I bought it. I think we're going to, because the market is doing, this very wide and loose action, we're going to see wide and loose action in most sectors across the board. So I'm really only interested in names that are giving tight risk entries coming out of consolidations, things like that. We've got rates. We need to see this pattern break for, a significant, equity rise. In my eyes, it's looking similar to last time. Last time, we went on this parabolic run. It got steeper and steeper and steeper. And then once it broke, bam, that led to the huge run beginning in October, end of October, all the way down to, mid-March or whatever it was, when they started rising again. And you can see the angle again. Angles start to get a little steeper. Maybe makes a run towards 5%. Maybe it breaks earlier than that. But once we see this break, I have a feeling that'll lead equities to rise again. So tons of earnings this week. Google, Meta, Amazon, I think is the third one. I'm not sure if they're the big third. Tesla's tomorrow. So huge week of earnings. But, for us, it's going to be a very, or for myself, it's going to be a much more muted week than usual. So that's kind of what I wanted to get into. So where do we go from here? What do you want to do it? How do you want to do it?
Let's see. I'll go over a couple sectors really quick, and then I was reading your shakedown this weekend, and I feel like you dropped a lot of nuggets of knowledge. So we'll bounce back to that in a moment.
Yeah. That's a good idea.
But yes, I'm not going to beat on a dead horse in the sectors we spoke about. But a few, again, the big cue here is we have utilities breaking out or attempting to break out. And that's something that we tend to see a flight to safety when the market is not looking that good. So we're seeing, one of the only sectors that's looking, like it's going to break out. That's just giving us, that flashing like red light or stop sign, for putting risk on. Again, for a long-term standpoint, for dollar cost averaging into the indexes or individual sectors, that you want volatility, you want the market to be, moving up and down, left and right. Those things never change. People, I've been getting a couple questions in the last week where like, should people stop their dollar cost averaging because the market's starting to pull back? And that's this kind of the silliest thing to do, especially that we're, barely a few percent off all-time highs, where for the members who really stuck with it last year, more so in, I guess pretty much most of 2023, this was a very difficult year. Oh, this arrow, just give me a second. So, if this was the highs of the market, if we're going to say this is the all-time high in the short term, similar to what we saw in 2022, this whole breakdown was no walk in the park. It was definitely not a fun trading environment. It was a very difficult trading year. But for those who dollar cost average every single week down through this, by the time we were back to break even, all of these buys were up 30%, up 40%, up 20%. You couldn't stop here, stop your contributing, and then time to start it back up here and then catch this move. That's never going to happen in trading. But if when you stuck with it and you bought through the pain the whole way, you did get rewarded, and you continue to get rewarded. But it's very hard to start and stop and start and stop and start and stop every time the market starts to pull back when it comes to like the long-term investing. It's just the less that we can do in that regard of changing what's working, the better you're going to be. So for those, again, for the long-term stuff, just let the stuff keep working. That's what it's meant for. Another thing we were talking a few weeks ago was about this energy trade. Was it just starting? Was it just, kind of, ramping up to get going? Or was it, the short-term top? It seems like for now, again, this is a monthly chart. This is going back to the financial crisis. We can see it finally pushed back up through, again, minus a little breakout back in 2014. Seems like in the short term, it's a little extended. It has to pull back, but broadly, we should probably see some higher prices in energy over the year. But again, it's a big, this is a huge range, 30% range here in what the energy prices have been trading in this year. And it's just in the upper end of that range. So if it starts to pull back in, not going to be too shocking to say the least. Again, I was talking this morning on the pre-market call about how like my expectation, if and when we get a bounce, we really need that like capitulation. We need like the SPY to, gap down and reverse versus holding like the prior low. Like that we got a nice bounce today, but I don't think this is like that end all be all low in the short term. I think we need to, get that real panic selling, almost I showed, what was that example? I guess this is back. Okay, here we go. So here's like a similar example. Oh, here we go. So this is the example I was kind of showing this morning where we needed this day where the market looks absolutely like crap going into, pulling into support, gaps down and reverses. That's like that reversal day where we want to see that push to lows first before that bigger bounce. So today, it's good to see, some buying come back, but I still think that we, definitely smoke this 490 area to the downside in the short term. So again, I want to send this back to you, Sheikh, on, again, you mentioned a lot of good stuff about, some of your best trades in the shakedown this past weekend. If you want to maybe elaborate on what
so I'll elaborate kind of the process of what I went through. I was going over my trades last week, and I was just kind of disappointed in my executions, and I was looking over it, and I'm like, it was just kind of like, why am I taking these trades type thing? And it kind of made me realize how I was falling into the trap of, because the market's open, I have to have risk on. So the one trade I had last week, that I had a couple trades last week that were just not good. So, all right, you can see better in the QQQ. We have this day right here, right? We have that breakdown, and we have this day, and I'm buying relative strength. I'm looking for a bounce. And I'm simply buying a bunch of stuff, just looking for a bounce to retest this area before we sell off again. And we open a little bit higher and just, kind of puke. And my trades never really had a chance. I'm looking at these trades, and it's like, what's my probability on this trade? Why am I so heavy? Why am I, putting myself in these stressful situations? And then what I did was I looked at my account through the year, and I looked at my best trades, and my best trades were glaringly obvious about the setups and the conditions and the market background. And then I looked towards the trades I took last week, and it was clear I was just taking shots. So I took this trade looking for the bounce, and then another trade I took was, we had this nice little this downtrend here, where it was like, okay, we're in the steep downtrend. And then when we were at the bottom of the downtrend, I tried buying some Qs here for a bounce. It was like, okay, we got to the bottom of the channel, we puked it, and we immediately saw buying. We pushed up, began to look good, and boom, I got pushed out lower, and then we bounced again. And it's like, is that am I going to take that trade over and over again in my career and make millions of dollars? Absolutely not. That's a shot. That's because the market's open. I have to have risk on. And I looked at my best trades of the year, and it was really obvious. It was SMCI in the beginning of the year, not during this phase. This is wide and sloppy action. Like, looking back, hindsight's everything, right? The reason we loved SMCI so much was because it was sitting in this 5-month consolidation, this beautiful base. And this 5-month base happened after an insane run up. It did this crazy move from 80 to 320. Went up 300%. and then it went sideways for 5 months. Wide range, yes, but it's going sideways for 5 months, meaning it's not puking up that stock. Buyers are supporting that for 5 straight months. So here are the 2 entries we had that were so great. You know, this was the first entry. This was when the market was selling off, and it showed all this relative strength after the first week of the year. Gave us that first move, and then they surprise dropped earnings, taking out all-time highs, and we bought that one too. We like with size, conviction, pounds on the table on it. Like this was probably one of the best trades I've ever had. I could have held on to it longer. Went to like 1,000, but whatever it is. Regardless, the entry and the reasons for entering the trade were just glaringly obvious of why I did it. Sector strength, coming out of a huge base, market leader. You know, market's still in this uptrend, hasn't broken down recently. All these things pointing to it. Another one I had was this Microsoft, very similar time. You can see is sitting around 52-week highs, really tight consolidation. I was actually short this day playing the breakdown, market reversed, and I got super, super long here coming out of this base. And then look, you know, look at the move it makes, you know, straight to 415 or whatever it is out of this 370 base, pretty much straight up, right in the 8-day. Everything looks good. That's like a great setup to me. That's an A+ setup. And then the last one was this CRISPR when the biotechs began breaking out. And you know, we want to talk about sector strength and all these things. So here's CRISP. There's obvious base right here. And at the same time, the IBB was, you know, showing this great, huge advancement. 4 or 5 weeks of consolidation, boom, next move higher. CRISP, while I was doing that, CRISP was just consolidating this tight range, following this huge advancement, and then what happens is a huge breakout. Now I'm looking at the market setup, and it's like, you know, maybe we bounce, maybe we don't. I'm looking around the charts. It's like maybe it bounces, maybe it holds support, maybe it doesn't. It's none of these things that look like any of those previous charts that I was so excited about. So it kind of it made me ask myself the question, you know, what is my edge? And my edge is really, really loading up on those base breaks, things like that I just showed you. And then it's, you know, not crushing my account when those trades aren't there. Yes, I'll trade volatility. I'll trade some back and forth. I'll take some stocks short. I'll take, you know, short-term trades long and stuff. But the bread and butter of my trading comes from, you know, a strong earnings name, bases out, takes out that earnings high. A hot stock or in a hot sector flags out for a month straight. I can load up on size as it breaks the base. That's why I bought this LPG. Was the only thing I was really attracted to coming into this week. It's consolidating at all these moving averages, coming in this tight base, and it's got a very tight risk entry. Those are the most important parts of my trading. So that was like really the only thing that that worked in my system this week coming. So, you know, during this time, what I've done so much in past times, in past markets, is I've always tried to be the best trader in the world and have to be involved in every move. You know, I want to buy off that low. I want to sell it to that high, maybe short some in the high, blah, 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 blah. Like that's not making me the most money. And that's making me go crazy if I'm, you know, so action every single day. So when the market's not really fitting my style, what I wanted to make clear to everybody is like, we don't have to pound the table all the time. We want to keep our mental capital at highs, so that when we get this next earnings run, if we get it of names setting up, we're just so ready to go. And my one regret on all those trades is that I gave up on them I sold too soon. And now if I had that set up, I would just be dying to hold the stock compared to the action we have sitting, you know, around the market right now. Nothing even looks like it. And just a recognition of the lack of setups will have us ready to 1, pound the table when it's time with the good setups, and 2, have the conviction to hold these setups for the full move. So that's the one thing I'm working on. That's why I'm not very active this week. And you know, just kind of want to make that message clear to everyone. You know, to make a lot of money in the market, you don't have to have money working every single day.
Yeah. For those big winners you're talking about, and you said like you wanted to work on holding them longer. Do you think there's anything like a simple like thing you're going to try next time, like, you know, letting it, you know, trail on the 8-day or
just trail on the 8-day, just not. And you know, I was staring at P&L a lot. So this Microsoft, for example, when we had this day right here, this is when the market was just beginning to break out. So it was like we opened high and I took off a majority of my position. I'm like, oh, we're so extended from the 8-day. My entry's all the way down here. So I got a great move in 4 days. Maybe I trim some, yes. but the bulk of my position has to at least be the 8-day. And I
Mhm.
noticed that in most of my trades that worked really well this year. Not even just these three. I mean, this one's ridiculous. This
Mhm.
one's such easy to say in hindsight because it was so volatile. Like, it went 350 to 500 in a few days, and you're trailing that like the second day, it's at 480, and the 8-day is $100 lower. That's kind of
Mhm.
hard,
Yeah.
to hold against that area. Definitely hold some for it and have more faith in the move when it's coming out of these patterns. But definitely just trailing moving averages is the one thing I'll definitely work on with size, with
Yeah.
like big size, not stare at that P&L.
Gotcha. I like it. I think the one thing I know is for me, for any of the times that I've taken profits in winners, like after that first, like even maybe not SM6 didn't really pull back at all, but a lot of times we get that initial first pop higher, the 3 or 4 day move higher in a name. And it has that, kind of 2 day pullback. And that's for me, a lot of times where
Yes.
I'll get, yeah. So like
Yep.
that following day in Microsoft, like that would be typically a day I'll get shaken out. Like I'll get the
Yep.
4 days, that day shakes me out. And then it has that next run. And that's something that on my end, like I have to be more aware of almost like letting that first pull in occur before adjusting the stop. And then, after that day has happened, and usually it's like one day where it's shitty. It's like that one day, like, oh, this trade's over.
Yeah.
And then that next day, if you get that follow through day higher, okay, that's my new out. And I can, take it, from
Yep.
there. And that's one of the things I noticed for myself over the last like 6 months. Like that was a bigger,
Yeah.
and not a big improvement, but a little improvement that, keep me in bigger, more size in the names for longer.
Yeah. Yeah, going on that notion, I actually just started rereading a classic, How I Made 2 Million in the Market, Nicky
Mhm.
Darvis.
Yep.
He's only buying boxes, which are bull flags. And he was a guy, he was a dancer out in Europe, and he would trade, and they had to trade so crazily. You had to call brokers and get bets
Uh-huh.
and everything. But he would like micro trade, and he was killing himself. And then when he started buying out of technical boxes, literally like this Microsoft here, he
Hmm.
would go away and
You go on
he'd be like, "It's
vacation,
not
right?
working." He's like, "Yeah, no." He'd go dance,
Oh,
He
okay,
was
okay.
a dancer. And he was like, "If I had been staring at the market every day, I never would have given these things a chance to work. I would have sold it and cut my profit off as quickly as I could, being so
Mhm.
scared of giving it back. But just letting these things work higher is how I got super rich." So
Mhm.
we have all the tools at our disposal. So the next time that setups get like this, we'll be ready. Instead of crushing my mental capital now, when frankly I have no idea if we're going higher or lower tomorrow.
Mhm.
No idea. It wouldn't shock me if we just collapse today's move and
Mhm.
put new lows in. And today was another trap. It also wouldn't surprise me if we rip up to 510 tomorrow. So in these environments, I don't need to do too much. Maybe I'll have a couple things on and be involved a little bit, but that's not where I want to do the bulk of my trading or
Mhm.
use the bulk of my mental capital, which is a very real thing.
Mhm. This is the time where you're like shadow boxing the gym. You're not stepping in the ring, in a sense.
Exactly.
Yeah.
Yeah, exactly. Yeah. Be involved, but not putting myself in a position to get hurt. It's not worth
Mhm.
it.
Yeah.
And then when it is worth it, I'll really be able to load up and mentally just, put that major risk on it and be ready for it. But I think we touched on most of the points we want to touch on. It was
Yeah.
really just, be a little less active now. We got a ton of earnings coming up in the thick of earnings season. So it's not like not like being inactive for 1 week. It's not like we're not going to trade for the next 2 months.
Mhm.
It's like we literally have Microsoft, Tesla, Google all reporting this week, and then we get into where it's 1,000 companies next week, 1,000 companies week after that. There's going to
Mhm.
be a ton of action, a ton of stocks, but right now, when we're trying to figure out what's the next move for the market, just chill a little bit. That's
Yeah.
it.
That's like even when you look back at a lot of like the corrections that I feel like as time has progressed, and since I've started, I guess, I feel like each of the painful periods get a little quicker and quicker, maybe except for like 2023. That was just a crappy year in general. But when we say like take time away, except for that example. It's not
Yeah.
like it's like you said, not months. Like the market be shitty for a month. And it's like, okay, we're a week or 2 weeks into that. It's like just give the market another 2 weeks to, have some crap, have some crappy weather, and then the sun's gonna eventually come back out. So
Seasonality wise, in election years, this is
mm,
very normal for the market to mid-April start to consolidate, and then Memorial Day sets up, and then it's
mhm,
just like summer rally ripper. So that wouldn't surprise me at all if we went sideways for 2 months and
mhm.
just set up an absolute ripper through the summer into the election. I would love to see that, and I would love to just be ready for it and make a boatload of cash this summer.
All right, Jake, I think we did it.
All right, we did it. All right,
All right.
guys. As always, you're not going to do it. But subscribe. You want to ask questions toward Bennett?
Don't worry, Jake. I'll be the first one to comment. I'll be like, first.
Yeah, yeah. Bennett Tamani and Matthew Prisby in the comments. You guys are so cool.
Great video.
Yeah, teach me.
Go Raiders.
All right. Anything else?
That's it.
No, that's it. All right, we'll catch you guys next week.
If you think you're going to get rich overnight trading, we're not for you. If you don't want to read daily or weekly to improve upon yourself, we're not for you. If you're not interested in saving weekly and building your accounts for the long term, we're not for you. If you're not looking to improve yourself daily, we're not for you. If you do want to build wealth for the long term, read weekly, save weekly, do all the right things for the long game, then we might be for you.